actually does. My question to you, Senator, is how would you work to ensure lines of credit remain available on Main Street to real hard-working Americans?
It's a great point. First of all, Dodd-Frank is still, it's a massive piece of legislation. And in essence, authorizes regulatory agencies to write a bunch of rules that even to this date, some of the experts in America don't fully understand how they're going to work, and they're still writing and implementing some of these rules. So this complexity alone is a problem. And here's why. First of all, there's a reason why today the big banks are bigger than they've ever been. The big banks are bigger than they've ever been, and here's the reason why. Because they can afford to deal with all this complexity. If you're a big company or a big bank, and they hit you with 1,000, 2,000 pages of new regulations, you have the lawyers on staff, and if not, you'll hire them to help navigate all of this. To your advantage. In essence, helps you, because you're the only ones who can. Here's who can't navigate all of this. The community bank. The local community bank, the local bank, the small-scale development bank, in essence, the banks that lend money to small business. The banks that say, look, I lend you money because while you may not be able to get this kind of loan from a big bank, I know this community, I know you, I know your business model, and we're going to take a risk. We think it's a risk that makes sense because that's what we do. Our job as a community bank is to help finance the community. Those banks are scared to death because they're getting hit with a lot of the same regulations. But they don't have 1,000 people in their compliance department. They may have 1 or 2, and now they have to hire 4 or 5. So they get scared and they hold back. So for that reason alone, just the complexity of it is enough reason to repeal it. The second reason is the rules are so unclear and so nebulous that once again, the small entities are scared of it. They're afraid to violate it, to be fined or put in jail or put out of business if they violate it. The big banks have no such concern. And we could go on and on. One more thing about Dodd-Frank that's very concerning. For the first time ever, it actually creates a category of banks that are basically too big to fail. It is now a seal that you get from the government that defines you as a too big to fail bank. And some people say, well, that's good because now we know who they are. Let me tell you why that's bad. Because after TARP was passed, the message that was sent out is, if you're too small to matter, you're on your own. But if you're too big to fail, if things really go wrong at the end of the day, government's going to bail you out. We can't let you fail. You're too big to fail. Well, believe it or not, these banks, this is a huge strategic advantage for them. Because their argument is, we're too big to fail. And that's not a slight for us. That is sending the message to America and the world that these banks, if they ever get in trouble, the government's going to bail them out. And that's what it sort of basically creates a permanent TARP fund as a part of it. So for all these reasons, this law has done nothing to deal with the causes of the debt. The causes of the meltdown. The causes of the meltdown were the monetary policy of the Fed, the regulators who had no idea what was going on, and laws that required banks to make bad loans, beginning in 1999 and 2000. They were basically told them, you must lend money, even if the people who are borrowing can't pay it back, because we want to see a certain number of people own homes. These were the causes of the housing meltdown, especially the Fed. This law does nothing about any of it.